The stock market's been up and down lately, so should you invest into the real estate market instead? Well, let's talk about the two and see what might be a better option for you and see how does the stock market affect the real estate market. Most investors will look for stability if the stock market is going through any sort of turmoil or any kind of uncertainty, which we've seen in the last couple of years. Now, we've had those specific ups and downs, like when COVID hit, we had that massive sell-off, and we also had a sell-off a few weeks ago as well. Now, are you as an investor going to run out and sell your positions? Probably not. If you really believe in the companies that you're invested in, you probably would pump even more money into the market, buying more stock and dollar cost averaging your positions that you have, which I've also done that too. But should you look at the real estate market? Should you look at buying some investment properties? I like real estate for various reasons, and I wanted to talk about, like I said, how does the stock market affect the real estate market? Now, I think why a lot of investors are looking at the real estate market more and more is because of inflation. Inflation has been a really hot topic lately, and I think as people realize that the real estate market is a great way to build their wealth, I think people are looking at that investment vehicle more often these days. Now, I get it. You can put money into crypto and NFTs and all that stuff, and you can make great money. And if you truly understand it, hey, more power to you. That's awesome. But for those that are playing the longer game, and maybe you're looking at real estate as a great way to build wealth, most of their net worth is built up by their primary residence. So why not own a property? You may not have a lot of disposable income to continue to invest into the stock market, but if you can own a home, it's a great way to start building wealth. And that's why I'm a huge proponent of owning a property. I know there's some social media guys out there that talk about not owning property and you should never buy a house and rent and just invest in yourself and invest into your company. And that's totally agreeable. And that's great to have an opinion. But for most people, owning a home is their retirement. It is going to be something that they maybe pass down to their kids. So it's a huge purchase, and it's a huge part of a lot of people's lives because more people will not be able to save or invest that type of money to make a couple $100,000 like we've seen people make in the real estate market. So I think if there's any sort of uncertainty in the stock market, I think more investors will start looking at the real estate market. The problem is there's not a lot of inventory out there. So the competition's fierce. Everyone's looking for ways to get their return back. If you just take a basic index fund, you're getting probably 10% back on your money. But with the right investment through real estate, you can probably get a lot more than that. With the right investment through real estate, you can certainly get more than 10%. And the thing to also remember why real estate is so beneficial is that you can get monthly cash flow off your rental properties. Now, I get there may be some stocks where you can get some dividends on, but you're gonna have to put massive amounts of money to equate to the same amount that you can get through having rental property. And there's a lot of benefits that go along with owning a property. Besides the cash flow, you also get the tax write-offs. And with all the inflation that's been going on lately, it's a hedge against inflation. And one of the beautiful things about real estate is that you can use leverage. So if you find a house and if you want to buy it as an investment property, you only need 20 to 25% down. How cool is that? You can leverage 75 to 80% of the property to purchase. If you wanted to buy a stock, you have to have the capital yourself in order to purchase it. So it's a lot more cash that you have to put up front in order to get that type of return. And the one thing that I went through personally when buying stocks and then buying rental property is that there's less volatility. The stock market, depending on your stomach and how much you can take, every single day when I had money in the stock market, I would look at my phone and I'm checking to see what did my stocks do today? Was it up? Was it down? And those days that they're down a lot, you almost want to sell. But of course, that's not what you're supposed to do. But how many of us can really stay disciplined to not sell in those types of moments? So if you buy a house, you really can't sell it today unless you're going to do some sort of fire sale and maybe sell it to a house flipper who's going to give you cash and you can walk away from the property. But for most of us, you're going to hire a real estate agent. The real estate agent's going to put it on the market. So it's going to take several weeks. And then if the buyer decides to get financing, you got another 30 days on top of that before they can close. And owning multiple investment properties, I never really think about looking at what the value is every day because I really don't care what the value is because I bought those properties with the pure intent of it generating cash flow for me and my tenant will pay the house off, which then at some point in the future, I will hand those properties off to my daughter and she'll have her own little real estate portfolio that she can start to manage herself. So I think that's another great way, depending on what your tolerance is, as to why maybe the real estate market might be a little easier to deal with, especially with all the emotions that get involved. And by the way, if we haven't met before, my name is Seanu Uyehara. I'm a branch manager with Loan Depot, helping you finance your homes all across the country, especially if you're a first-time home buyer or if you're an investor looking to build your real estate portfolio. We've got you covered. And don't forget, you can hit the description below. There's links to more information on how to get your mortgage right. And don't forget to subscribe to my channel and hit the bell. We drop videos every single week because I want to help you purchase your first home, or like I said, if you're an investor, look to build your portfolio with you. Now back into the video. I've also seen that when the stock market tends to drop by 10 to 20% or so, mortgage rates have typically followed. Not in the same sense where the rates are going to drop by that significantly, but rates have dropped as well. I think we've gotten spoiled over the last several years with the stock market going up and interest rates being at all-time lows. I've been in the mortgage business for 15 years, and I could never imagine mortgage rates being at the twos that we've seen. That was so unbelievable. And everyone that purchased or refinanced at that time, you literally got the best opportunity in front of you and you took advantage of it. So props to you on that. I think the problem with rates going down is that investors that are out there, they're going to look to buy, and it's going to crowd the market even further. The demand for real estate right now is probably at an all-time high everywhere across the country. We have clients that are buying their first home. We have investors that are looking to purchase. And a lot of times they're putting out multiple offers to get an offer accepted. It wasn't like back in the 2008 crash where there was a ton of inventory on the marketplace. So investors could literally keep purchasing homes one after the next because there were tons of properties to choose from. Nowadays, you're usually on a wait list, or you have to have an in with some realtor somewhere that's willing to sell you a deal that they're finding in order for you to get another investment property. So I think it's safe to say that if the stock market poses any sort of turbulence in the future, and if inflation is continuing at the pace that it is, I think you will see more investors pull out of the stock market, or maybe they'll just slow down the amount of money that they're putting into the stock market and look for other investments. And I think real estate's going to be one of them. Now, for first-time home buyers that are out there, this doesn't bode well for you because there's only going to be more competition in the marketplace. And that's why I've told a lot of our clients who are first-time home buyers, they should seriously look to purchase sooner than later. And that's not for any other reason other than if they can get in now, it's going to be to their benefit, because if the investors see the uneasiness of the stock market, they decide to come into the real estate game, they've got a lot of cash, because who hasn't been making money in the stock market lately? They're going to pull their cash out, or they can leverage their portfolios, and they're going to buy properties, and they're going to squeeze out the first-time home buyers, because guess what? All of the sellers that are out there would rather close quicker, and they would rather deal with someone who's paying cash. And I always tell our clients, back in 2008, 9, and 10, back when the crash happened, there were so many investors in the real estate market. There were tons of guys that were buying cash. In fact, in Las Vegas, I remember at one point, the total monthly sales, 60% of the entire market was going to cash buyers. So it made it really hard for anyone who was getting financing to get an offer accepted. And that's the last thing you'd want to see again if you are a first-time home buyer, because the market's tough as it is now. But could you imagine that maybe if there was 10 offers on a house, 6 of them were willing to pay cash, and now the seller has to look between 4 people that want to get financing? It's going to be really tough for you to get an offer accepted. The only downside to the stock market is that now that we've seen interest rates steadily climb, that does make real estate investments a little tougher to find, because as prices have continuously gone up over the last several years, we could take advantage of that because interest rates were at an all-time low. So as an investor, you could cash flow nearly on any property that you were looking at out there. And you didn't have to put a ton of money down because, again, you had the help from also the rental market as well. But now that interest rates are climbing, your monthly payment is going to be higher, and the real estate market's not slowing down anytime soon. So you have some of these factors that are working against you to where you may have to put more money down or possibly consider paying more points up front to buy your interest rate down so you can get a lower rate on your real estate purchase and cash flow, so that way you can meet your returns that you're looking for. But the other factor that I've been hearing some whispers about is rental caps. There's certain cities across the country that they're starting to try to implement rental caps, which is only going to hurt the investor in the long term, because if the market's going up, you have a limit as to how much you can increase your rent. And that might hurt because you have some of these parts of the country where you have people increasing their rents by $500, $1,000. And if you can only increase it, let's say 25 or $50, you're really going to lose out. And you might want to stay in the stock market. So I think there's a lot of things at hand that can work for you in the real estate market if you are deciding to possibly pull some money out of the stock market to look at buying rental property. However, a lot of the fundamentals that investors were looking at as to how to make their decisions in the stock market, I think it's almost safe to say you can throw a lot of that out the window because of what's been happening over the last several years. If the stock market continues to have its ebbs and flows, I think you're going to get more investors that are going to jump to the real estate market and hedge inflation. Now, could all this change in the next 6 months? Absolutely. So I think it's definitely a hot topic to keep an eye on and see what truly happens in your markets of where you're looking to purchase, because every market's going to be a little different. And again, you want to make sure that you are buying in a state where you're going to be able to capitalize on your rental portfolio as well. So do some due diligence, make sure that you're crossing your T's, dotting your I's. And of course, if you want to learn how to get your mortgage right, you can always check out one of my playlists. And thanks for watching. I'll see you on the next video.